Okay. Hi there, guys. Just let me know if you can hear me. I'm sorry, a tad late today. Get myself organised. Didn't realise the time. Let's see who's on, and we'll get rip into it. Hopefully, you can't hear me slurping away at my coffee. I need it this morning. G'day, mate. How are you? Hey, you're the bit of a motivation for me today. Just on the multi-time frame. So I hope you don't mind, mate. I might bring up your name here and now and then. All right. So today, hey, Mark. How are you, mate? Nathan. Good to see you guys. So what I want to talk about today, as the stream entitled title suggests, is talking about multi-time frames. I mean, I know people do use them, but it's whether enough emphasis is actually put on them within your own trading. I know for me personally, um, and I think anyone that knows Davin spoke to Davin can attest. He can attest anyway. I got caught up in the chop quite a bit. You tend to get so focused on your trading time frame. So for intraday, for especially, if you're trading intraday a lot, multi-time frames is sort of the key, I think, to getting on the right side of the action. And we've always, we talk about big money flow. I think the stream that we spoke about, that I spoke into last week, was about big money flow. And we like, it's good to use the term the big boys, the moving the market and the you want to you want to follow the big money flow. um, to me, it's kind of true because they don't get set, and they do chop around, especially on the indices, on currencies. They'll chop around levels, trying to get the liquidity to build their positions and things. Even on shares, shares can chop around a lot. As someone is trying to get set, you might get set on the pullbacks. They might, the market's drifting lower, and you can see the way it's sort of chopping lower with lacking conviction from sellers, meaning potentially they're getting set and they're trying to build a position on the way down. Then they start to, ramp back up and start to pressure price higher, trying to get that momentum swing to the upside. So you're trying to analyze what the market's doing, and trying to get on the right side of that big money flow, like I mentioned. Um, and I think that by using multi-time frames, it gives you a clearer picture when you're potentially getting in a bit too early, a bit too late, and not in the prime positions. I think when you're starting to follow, and I do it, like I said, I would really get myopic in my, well, a long time ago, really myopic in my intraday trading. So you're trading from the 5, say, and you're looking at the 30-minute charts. So they're my two key charts to get on the right side of the action when the market's starting to trend, because we're trying to trade momentum. We're not trying to, you know, pick the ultimate high and low and all that sort of stuff. We're just trying to trade momentum. But the difference between momentum on a 30-minute chart and a 1-minute chart is completely different. You might be trying to, drag out 4 or 5 points, especially on the SPY. 4 or 5 points on the 1-minute chart when you could be dragging out 30 on the 30-minute chart, for instance, or 20 to 30 points. Um, and I trade the Hang Seng a lot, as I guess many of you know. When you're on the right side of momentum, the thing can go 200 points. So just trying to drag out 50 points makes it a lot easier when you're getting on the right side of the action with that momentum push, as opposed to trading a breakout that you're going to get chopped to pieces in. And I've done that. Look, I've done that many, many times. Buy the breakout, find that it sort of pops up, it stalls, and then comes straight back down on top of me. And I have to get out, try again, get out, until I realize that I'm getting too, like I said, myopic on the 1-minute chart, expecting it to happen. And you take a step back and look at the. G'day, Alistair. By the way, mate, I'm going to get back to your emails. Sorry about that. I will get back to them today. I'll send off. You give me a call. Might be easier, just having a bit of a chat. Um, so, like I said, not getting too myopic on the one, because you sort of get caught up in that price action, but you're not realizing that that's the chop um, that could be playing out, which is a bigger player getting set on a position. And then you'll see it might be a lot clearer on the 5-minute chart or even the 30-minute chart, that you go, oh, okay, I'm against the trend. Okay, there is no momentum just yet. It's a range bound market, and I'm trying to trade it from a momentum perspective. So we'll chat a bit about that. I'll give you a couple of examples, especially on the Hang Seng, intraday. And look, it still happens. You can get it a lot on shares as well. So For instance, I might be looking at a daily chart, and if you just wholly stare on the daily chart, nothing else, you think that's enough, and you see that it looks like it's extending, you go, I'll wait for a pullback. If you go back and look on a weekly chart, the weekly momentum just might be starting to turn up. So there may not be a pullback at all. I mean, the weekly chart could look fantastic. And we've got an example on Mount Gibson at the moment. The two different charts, they're saying two different things. The daily, and the reason why I took the trade on the daily chart was more based on the weekly, because if that goes, it's going to go, and you're going to get a really good payout on it. Whereas the daily might look a bit choppy at the moment, and it might be a minor level that we traded through. But the fact is, if it does break another level just above up, so for instance, we've got set at, I think, 92.5, 93, 92.5. I think if it breaks one, that's a key level on the weekly chart, which could lead to some really good higher prices. Now, we could get caught in the chop. I don't know just yet. But the fact is they're sort of saying two different things in a way. So you've got to really make sure you're focusing on different time frames to get a clearer picture of the bigger picture, I guess. So we'll get into it now. Before I get too sidetracked in jabbering on, thanks for joining us. Remember, anyone that's new, if you do watch this later on, it'd be great if you can leave us a like if you're interested in what we're talking about. If it's rubbish, so be it. Sorry about that. But if you do enjoy it, leave us a like on the YouTube channel. Even help us spread the word a bit. Grow the channel and put up more videos, of course. What you'll see on the chart on the screen now is our site. So Twitter on the top left-hand corner. Follow us at Twitter, Facebook. If you're going to follow one or the other, stick with Twitter. I do a lot more on Twitter than anything else. If there's never going to be something that's on Facebook that's not on Twitter, basically. And subscribe to us on YouTube, the bottom right-hand corner. You'll see that that there at TradeSetup, capital AU, for more videos. And you'll also get, if you follow us on, subscribe on YouTube, you'll get a heads up when something's coming up. So if it happened like today, you might have been sitting in there at 12:30 going, where is he? I was just running late. So you did know that by what is it called? Thing that pops up on YouTube saying there's a stream coming. So there you go. That's me done. And we'll get into it now. So now this is something I've only started doing recently through Evernote, and that comes from you, Joe. I think you're putting it up. You do an Evernote, and I started looking at it. I think this is a great way, rather than just. So what I was doing every day, and I don't know why it took me so long. I'm a slow mover. It took so long to figure out. Was I would just take a snapshot of my trading day, mark up a chart like I've done here, and then just whack it on in a folder on my hard drive. But what Evernote I think is really good for, you get these tags, so you can go and set up any tags you want, and to categorize markets. So what I'll do is just go and put together the trades I did, and make some notes of okay. What I've sort of lately a couple of problems with ranging markets or trending markets, and just trying to identify both. So what I'll do is, okay, was this a ranging market? Put all my notes on, and then tag it to a ranging trending, like this tag here. So then when I go back down the track, when I've built up a good database, I can then go back and just look at some examples, and it helps you. Now, for anyone that doesn't know, taking notes is fantastic because it really does. Oh, okay. Yeah, that's. Let me see if I can change that. Oh, probably can't. That probably helps that there, does it? I'll just make that a tad bigger. So that, oh, I've done it again, haven't I? That'll do for now. So that, well, there's a chart. So that's helping me a lot just to get a database, because I think if you're trading and you're going to go through bad periods, you're going to go through good periods. Just recently, I'm doing well now, I think, but recently I went through a bit of a period where I was just, everything to me was a trend, and I'm getting caught in some chop. And then to get yourself refocused, it's great to go through some charts, like looking at this, go, oh, I had a pretty good day there. I was happy with my trading. Okay, there's some things I could have done well, like basically hold that. In hindsight, I could that first trend up. We bought that, made some good coin on that, but then realized that it wasn't going down. Jump back in, could have held that longer. A bid to offer kind of move. When I say bid to offer, I mean from level to level. The Hang Seng does that a lot. It won't just, most of the time, it won't just stall in between levels and pull back. That's kind of rare. Once it starts getting a good base and working its way out of a base, it will go, say, from a bid zone to an offer zone. And you're trying to hold for that whole move when it starts to trend in a trending market, and trying to, taking notes on when it is trending, what are the key aspects of that showed me that, yeah, it's trending. Okay, you got these pullbacks that are failing, they're starting the continuation sort of trades. Like this second trade was a continuation trade. Could have held that into that offer zone, or even potentially higher. Could have held that all day into the close. Yeah, so that's where I'm taking notes. But when I'm trading better, it's good. When I'm having a bad time, it's good to go flick through this Evernote. And I used to flick through obviously some charts that I've already, some previous trades. But this just makes it a lot easier to go through. So it's worth looking at. Investing in that and just starting to build your own database, put your snapshots in, anything you do. I know Joe does it quite a bit, and it's really good. And I know that it's going to improve his trading quite a bit. Those times when you go, what am I doing wrong? When you start to go back on your charts, sometimes it can be really, really clear. It can stand out like the proverbial, what you're doing wrong. For me, it's not so much. It's consistency is pretty good. It's always, for me, it's always been about, risk is not a problem. I don't hold things. I always use stops. I've always got a hard stop in place. Sometimes I cut it out earlier when I realize I'm wrong. Sometimes I let the stop get hit, but I won't ever trade without a stop, a hard stop in place. So when I'm in, I know exactly where, if I'm proven wrong, that's where I'm getting out. There's times when I get tagged and it goes back in my favor. I don't care. I'll just get back in. And I don't have a problem getting back in. What I do have a problem with, and I always have in the past, so focused on risk that I'm not letting stuff run as much. So that's what I've been working on over the years. Okay, so that's what stands out quite a bit. You go, oh, look at this trend. It's probably not so much that one. Look at the move. I cut it off. I made 40 points. I thought I was a legend, and it went 200. And there was no reason to get out. There was one just recently that I did cut out. I think it was I don't know what trade it was from, but it stands out what I was doing wrong. Okay. So it's really good to really sit back on and analyze your trading and see what you're doing right, what you're doing well, what you're doing bad. If you have veered off course with your trading, you're starting to get hit a bit more often than not. Are you doing something wrong? You can go back and say, well, nothing's changed. Okay, you can attribute it to the market being not conducive to your style, and you might just want to take your foot off the pedal a bit. Okay, but when you look at it and go, oh, I'm doing something wrong, I'm changing the way, and you can sort of go back to the basics of what worked before. Start to refocus and then get it working again. And looking at your notes and everything like that helps a hell of a lot. I can't stress how much it does really help. And it's helped me a lot in the past. Now, back to the topic, like I said, I get sidetracked quite a bit. Back to the topic of multi-timeframes. Now, this is an example of, I've actually got the charts here, of looking back on the chart. I mean, there's going to be times when you can get chopped out. Like I went short in here. Probably a dumb trade. I always, lately I've been doing dumb trades first off. This software here, John, is Evernote. And I can't remember what I paid. I think it was, I don't know if I paid monthly, like a few bucks a month, or is it just a one-off I paid for the yearly? I paid yearly, and it was like, I think 15 bucks or something ridiculous. It was really cheap. You just pay it, and then you can just start offloading. So what I'd do if you go home, these are all the things that the notes, I can click on a tag and it'll give me the list of what ones I've tagged under that. ICT setups. I've only done one tag there. I probably should go and fix my tags. But what I can do is just go through and then that's the setup, tag it as an ICT, tag it as a continuation trade, tag it as whatever. So that way I can go back and just keep on top of whether I'm doing it right or not. Probably should, mate. So should you. You got me onto it. So back to the 17th. So that trade there, I'll get up, like I won't talk about these examples as such, but what I want to talk about is a Hang Seng, and it might be clearer when we do this. So you can see this is the area we're going to focus on. So I'm looking at, I'll go to the 5-minute chart. Okay, so when we talk about multi-time frame analysis, you'll want to, this is the kind of thing where, for me, what I'm trying to do is, like I said, stay on the side of momentum. When I see the MACD, for instance, I sort of judge momentum from the MACD. Okay, when it's going from sort of that zero line and it's expanding out to overbought, oversold levels, it's what you technically term overbought, oversold. I know I've got I've got an expansion phase going on. Expansion is where I want to trade, okay? Because we go from the unknown to the known when you're expanding. When when you're trading up here, when you're looking at it earlier on in the stage, earlier on in the expansionary phase, when you don't quite know it's expansionary, but things are lining up, that's where you want to trade, because when the outcomes becomes a bit more known and you're trading up here, for instance, everyone else knows, okay, we're going up. It's quite obvious. And that's where people can get chopped around. They start buying and they get whipped around in that area because it's, I mean, for instance, this day, what day was that? The 24th, it traded up into a resistance zone. So I know that from my 5-minute chart, I've marked up all my levels prior. So if I see it going from a good little zone like this, potentially, if it holds this level and it starts going up, I know it's probably going to take out these couple of highs and going to trade into a key level which is traded to before, which I've marked up prior. So if you're not looking at it, you're looking at it on a 1-minute chart, purely just trading off that, nothing else, you can get chopped around when it trades into that zone because the market knows it's going to keep pushing in. People are going to go long with the breakouts and then get chopped back in when it falls back on you, when it pulls back, and then they go again. It sets up again. It goes into the zone because it's just working that area. It's working the zone. It's working some orders at that area where someone might be trying to get on a bigger, the bigger boys might be trying to get set on a bigger position. They might be averaging out. They might be taking some risk off the table up here from prior session, but into a key level, but you don't know that unless you're looking out on the bigger time frame, whether it's just a matter of scrolling right back out or whether it's looking at a 30-minute chart. But I think you've got to have what is happening. And I generally, the way I would look at it, 30-minute my key levels. I'm not so much looking for momentum on 30. What I'm looking for is momentum plays on my 5-minute chart, and I'm trying to trade them off a 1-minute chart. Okay, but the key is I'm looking for them on my 5-minute. I'm looking for that push. And you're going to get pushes like this, for instance, when it opens up and just goes straight up. So they're all 5-minute candles. You got 20, 25 minutes of a move straight up. So looking at just off this 5-minute chart, there really is no setup for me if I'm just trading off that 5-minute chart. But what I do know is expanding higher, okay? Because I've got like I said, my momentum, when it's going sort of from that zero line, it's starting to push to overbought. And everything's, the MACD's pushing up. Like I said, I like these, a couple of green on the histogram. When it's green, I don't know what you call them, the two lines, your averages are pushing up, and I've got mine based off a 10 and a 20 EMA, these two MACD lines and the signal line, whatever you want to call them. But when they're pointing up, everything is pointing to expansion. Okay, but if we drop that down to like I said, remembering there's no real entry for me. I don't see an entry. I don't see the pullback. I like to trade, I like to trade a little move up. Actually, I'll change that because it's way too big, isn't it? I like to trade off a pullback, because off a pullback, I know exactly where my risk is. But because I'm not really looking at it on the 5, I'm looking to get on the right side of the market. And for me, the bigger money is pushing higher, and it's probably going to push higher into that resistance level. I'm looking at the 1-minute as well and looking for those trades in the one. If I could just find that area again. So I'll be chopping. No, that's not it, is it? No, it was after that. Here we go. Looking at that there, you can see how there is a couple of setups. I mean, they're quite aggressive, but when you're looking at it and you've got the 1-minute and the 5-minute are doing exactly the same thing. See how the one's going from a zero, it's expanding out. It's the MACD is sort of expanding out, meaning there is a momentum play, there's a momentum move. We're not sort of getting, the price going like this when we're in an extended phase, because I tend to think we're going to run out of steam like this. We've got this little push up here, but to me, momentum is rolling over. Okay, so that's two different phases. This phase here, when your momentum's starting to roll over and when your price is pushing higher, to me, that's not the best breakout trade, say through that high. You could buy that, if you know what I'm seeing here, that buying the break there with your risk below, buying that breakout here with your risk below is not a very good trade, because to me, momentum's rolling over. You're not going with that expansionary phase. To me, you are entering late in that trend. Okay, so the 1-minute is telling me, okay, I don't want to take part in it there. I want to be taking part when the things are lining up, everything's starting to line up on my 5-minute chart. Okay, we're going to, even if it's after the first 5-minute candle, I should have marked that up. What would be 15, 18, 19. Okay, so if let's delete that out. I need another color. So let's just mark this up, make this a bit better. So if we then go and mark this up, this 5-minute candle finished at here. Okay, so after that first 5-minute candle is finished, I might want to look for it because I'm expecting, okay, if that first 5-minute candle, quite a strong candle up, okay, a lot of the times you can expect another good strong candle up. So you're looking for that expansion phase to continue. It's already started. You can sort of see that on the 5-minute chart. You know that, but you're not going to look for an entry on the 5-minute. You look for it on the 1. So what I see as a prime entry, you can see this very next minute, you had a minor pullback. So what we saw is a minor pullback here from there down to, that's not what I see, there down to here, the lows of around there. The next candle was an inside candle, fine, and it was kind of biased down. So this is all happening within the next 5-minute candle, and then all of a sudden we've got a break on the next green candle. So we've got green, red. The market pushes down. We sort of reacted off those lows at around 28,738. So for me, those 3 candles together are a good little setup. I like that break of the high because I know you might think it's aggressive, but it's all based on what's happening on the 5-minute chart. Okay, the 5-minute's going to expansion. We don't really expect the 5-minute to pull back, but what we do expect is a bit of chop in between. We might looking for that 1-minute setup. Okay, so by using the different time frames, and even I might have looked at the 30-minute saying, okay, I'm expecting a bid to offer move. If that support zone holds, which it did, and we knew that the first 5 minutes it started to press higher. Okay, so that 30-minute, I could be right on my analysis that we're going to go bid to offer. So I'm going to look for a long entry. Okay, and the 5-minute, the first candle green. So it's a matter of working way down to the 1-minute and just looking for an entry long. You're biased long. This bounced off the MAs, perfect. Red candle, great. So the very next candle, I'm looking for the entry, and I think I did trade that. I don't know where I traded it to, but I think I did trade that entry. Okay, because I know exactly where my risk is going to be. I'm taking the breakout of, say, this first candle here. Breakout. You've got a minor lower high in here. The lower high is broken. We've got higher lows coming into play. So all within those candles, you're getting a nice little entry setup. So I like that, especially off the 1-minute, this kind of a setup on the 1, because to me, that's showing some really good strength. Strength that the 5-minute's going to continue, and you've got that continued expansion on the 5-minute chart. Okay, so love that. That worked out really nice. Expanded so that by the time you could put your stop at break even, you can do whatever you want. But by the time you get the very next 1-minute candle, you know you're on the right side of the market. And you know that 5 minutes to expand higher. So you know that your emphasis or your thesis that it's going to go bid to offer from the 30-minute chart by using the 30, the 5, and the 1, like that, everything's on my side. We've got expansion on the 1, expansion on the 5. We're going bid to offer on, from the 30-minute chart. Okay, so everything's working out to plan. When you start looking on the 1-minute chart and you're looking late, so if you're waiting for that 5-minute chart to have a pullback, the pullback didn't occur to somewhere up here. Okay, so you're looking for and then all of a sudden you're caught in the chop because the 1-minute's rolling over. So I'm not going to take, when I start to get the MACD rolling over here, this little pop up here, I think to me, momentum is waning. So I'm not going to sort of take a long entry here, even though it might have worked out here. I'm not particularly wanting to take a 1-minute, an entry there because the 5-minute is now starting to run out of steam. So as you work your way backwards, the moves are going to be bigger. Okay, so we've all heard that you don't, trading off the 1-minute and looking for those little ins and outs. You rather trade from the 5, use your entry on the 1, because when those 5-minute chart starts to move, you get on an expansionary phase on the 5, there's a lot bigger move. Okay, and sometimes you could be trading from the 1, you're trading up, and you realize you're trading against the 5-minute chart, and you get caught in this chop. So you really don't want to do that when the 5-minute chart momentum is rolling over like this, but you've got to set up like this on the 1-minute chart. You sort of got to weigh it up, going, oh look, the 1-minute's rolling over to me. Sorry, the 5-minute chart is running out of steam. It's rolling over. The momentum's fading, but 1-minute's got a setup. Do I really want to take it? Because they're sort of saying opposite things, if you make sense. Okay, so let's go to the next example. Any questions there? There's going to be, I'll probably get caught up quite a bit. This is the 5-minute chart now. Still, we're back to the 5 minute. So that was the first entry. We said, expansion in that first 5 minute candle finished. Our entry was at the start of the next candle, the 5 minute candle, and you can see it just kept pressing higher. So once you get in, you could sort of keep referring to your 5 minute chart, saying, well, look, even this candle here, we had a flush of the low. We didn't finish below it. We actually finished back above, and we finished well in the green. So big pullback, expansion still on the 5, so it's still going. The trend is still up. Okay, and hopefully you can just ride that as far as you can, as hard as you can. This next area, the 5 minute, this in here, we'll see what it looks like on the 1, but you can see this is a prime entry on the 5. So if you're looking at this, and again, your 30 minutes telling you you've got a bit of a, we start to lift off these MAs here. The 30-minute might be saying, okay, I've got a bid to offer on I've got a bid to offer move. Okay, I'm looking to trade expansion with that bid to offer. So if I'm going bid to offer, I'm looking to be biased up. I'm not going to be biased short against a move that's on the 30-minute that's potentially going up. Okay, and then it's a matter of looking back down to your 5. So we've got this. I'll take this as a snapshot. It might help out a lot. Just to show you, to make sure we can reference it when we get back to our 1 minute chart. Here we go. Let's try to get this properly. All right, it's still showing that on the card. So this is the 5 minute chart. If we go back down to the 1 just to see what happened there, but we can see on the 5 minute, you might have been shorting it here and against the bite, from the 1 minute chart. If you're just trading purely from the 1, you're not doing your multi-time frames like we were explaining. This might look like a great sell on the 1. It might look like another good sell because you got a lower high into here. But when you're looking back to the 5, you go, well, it is a lower high in this zone in here on the 5, and it might be clearer on the 1. You might look at that, and that actual market probably more than likely the MAs are rolling over, and it might look like a good setup on the 1, but you've got to realize that on the 5, it's not really set up. You want to see, if I'm trading short on the 5, I want the MA, the 20 to be below the 50 essentially. Okay, and I don't want to be trading like this when it's an expansionary favor on the 5. I don't want to be shorting into that. I want to be looking for a long. Okay, so if we go down to the 1 to see what that, it's going to take me a second to find it. Here it is. So that there you can see, I mean, I probably wouldn't have taken, but you can see that chop through there. That was, can everyone see that clear enough? I'll bring up the other chart. Not that. You can go away. Where is he? Over here. You can see that area in here is sort of these highs through here. Is that too small? Is that coming through okay? Just let me know. So I'm guessing you can see it. This zone through here, if you're looking to buy in there, you're buying. I mean, there was no setup for me on the 1 minute chart there. So really no reason to buy. And then once it started to roll over, you get a couple of red candles in here, especially here. You can see this little fake out. It's absolutely perfect. Oh, good, no worries. This little move in here, I'll probably be honest, I think I traded that short, and I will say I do some dumb things sometimes, and that was probably one of them. Looking at that short there, I mean, as a setup, you've got a lower high. I'm trading that breakout, my risk is above, and sure, lo and behold, I probably got stopped out there, and I think, I'm not sure how I traded this. I might have traded, what day was that? 23rd. I don't think I traded it, did I? Let's just see if I did trade it on the 23rd. Oh no, I didn't. That's not the 23rd, is it? I did trade so in here. No, I didn't short it there, so I managed to steer clear of that sort of little setup there. But you can see what we're saying. The MAs are rolling over, so your 20s below the 50. So if you're just purely looking at that one, you go, well, that could be a good setup, short. You've got this action here, it failed, flush through the highs, and then it's come straight back down. Okay, we've had another dip at it, and then we faded. We basically went sideways for quite a while there. So if you're expecting it to go long and the market was just fading there, and then it started to get a couple of red candles, and then you got this kind of setup just in here. I mean, it's fair enough to think by looking at this 1 minute chart that we could be heading south. Okay, we could be taking out this low. If you can't go up, probably go down. But if we go then and just remembering what's happening on this 5 minute chart, the momentum's definitely up. Okay, and this area here was really just a fake out. We're holding the higher low, we're holding the longer term MAs, and we're looking for, when we start to expand on the upside again. So just bearing in mind that you could be, this trade here is with the trend on the one, potentially, not the overall trend. We are getting momentum sort of heading south, but momentum on it was in here. Momentum was really still green. It was still positive on the 5 minute chart. So you sort of, one, you're expecting to fight the other. Okay, so, and then remembering, if in doubt, go to the longer term time frame. Stick with the 5. If you don't know whether this is going down, you're better off sticking with the 5. Okay, if you're certain that it's going down, okay, you can trade it from your entries on the 1 minute chart. But I'm purely looking to refine my entries from the one. I'm not looking for bias from the one. I'm looking my bias to be from the 5 minute chart, the longer term time frames. So lo and behold, that headed up there. I think I got it on the upside from there. I think I must have, for whatever reason, I think I was watching this and I was keeping an eye on that 1 minute chart. So, well, if we do run out of steam just in here, I didn't want to trade short there. I didn't want to trade short because the 5 minute was up and the 1 minute really hadn't rolled over just yet. We hadn't made a new low. I'd rather trade off a new low. You make a new low, then you get a lower high come into play. That's where I'd rather be trading. And by that, I mean, like we just draw it here. I mean that that's the low there. I mean, the market's pushed through the low and then we get a lower high to work from. I'd rather trade that than trade something preempting, taking out that low, because to me, that could easily, looking at the 5 could easily hold a high low. So I was happy to stay on the sidelines watching it. As soon as I saw this flush and then we started to break out through these highs, okay, I was long, remembering that 5 minute chart, okay, if we just take a step back, oh no, that didn't really work, did it? Remembering that 5 minute chart, at this stage here, you don't know whether it's going to be a high low, or we're going to press around through this low. But as soon as you start confirming with this action here, that flush and then bounce off the 1, there's a really good chance that that's going to be a high low on the 5, and we need to get some sort of continuation trade and press higher. And for me, this kind of price action, when you can't get through here, you have a pullback. You have another go. Okay, so buying's occurring in there, but the market was still getting capped by some selling pressure, and then we have a pullback, and it holds a higher level. To me, there's a higher chance that we're going to break through, because you got sellers here, they're all loaded up on the short side, and they're going to get squeezed out. Eventually, you probably expect them to get squeezed out. So for me, that was a prime setup to go long, because we've got a low here put in place. And we're talking about the 5 minute now, the 5 minute chart. A higher low on the 5 minute chart. A higher low means you're going to go to higher prices. Basically, you would expect the previous highs to be taken out, which is exactly what happened. And then you got another continuation trade. You could have traded off the 1 minute there. All right, so does that make sense there, guys? I think I had one more example. Maybe I didn't. Look, let's talk about this one. So for me, look, it's easier in hindsight, but if you can imagine that we're looking at that, we've sort of got, it's hard, but we've got that picture there. We've got a red candle in there. And if you're looking at that, actually that wasn't the trade we just talked about, was it 23rd? No, it's 2 days later. So if you're looking at that kind of price action there, so that's the latest candle just finished. Right, so what can you put together, okay, to build yourself a picture? What I can see here is we've got a move up, and we reacted down again. So we retested sort of the opening lows in this. We push through into new highs, We tried and we got into new highs here. That was the 11:30. Actually, it wasn't 11:30. This was 11:30 open. So we pushed the new highs. It comes screaming straight back down again. And this candle, this green candle here, again tested to new. It actually took out the lows. So when I'm looking at that on the 5 minute, as if you can imagine, when that candle was still playing out, that was all green at once. Sorry, that was red at one stage from all this area when we were at the low there. That area was a red candle. So if you're looking at that, come on, you're looking at that as being red, and you haven't even got the wick there. It was just open and went straight down. You took out the lows. On the 5 minute, you go, okay, maybe we're starting to roll over. The problem is on the 5 minute, the trend is still up. The MAs were up. Okay, the bias on the MACD was still up. Okay, so really looking at the MACD, looking at the MAs, I should still be biased up. So I'm not going to take a short trade here based off this 5 minute chart. If I'm on, even if I'm looking on the 1 minute chart, I don't want to take a short trade in there. Okay, off the 1 minute chart, because the 5 minute is not supporting my thesis of a market that's moving down. It's actually, the 5 minute is saying the opposite. It's starting to go up. So as soon as you get this candle start to finish and you ended up, it was green, to me, that's okay. We've rejected the lows, 1, 2, that's the third time we rejected the lows. We even pushed into new lows. So you know when it pushes into new lows, it's triggered some stops. And as soon as it finishes back above, you got to be, you got to me, my biased up is just got stronger. Does that make sense? So before I wasn't keen on looking for a short. Now I'm definitely not keen on looking for a short. Okay, so then when you got a couple of good green candles up here start to play out, okay, what we've really done with this move up here, we've pressed back into the highs. Okay, that's fine. I still haven't got a setup. I mean, we'll look at the 1 minute in just a moment, 1 minute in a minute. I still haven't got a setup just yet. I've got this red candle finished back to the MA. So you go, okay, what I'd be looking for here, based on the 5 minute, if I'm trading purely off the 5 minute, I want to see some sort of higher low. So I wouldn't mind seeing another red candle. I want to see maybe a rejection, and then I want to see the market turn back up again. Okay. But what we got the very next candle was just bang, straight up. And it basically finished on its high. So what it's done is retraced this move down and pressed back up. So to me, that's kind of the first time we really bounced off the MAs. So it's showing less commitment from sellers and more commitment from buyers. Does that make sense? So previously we pushed through the MAs. So this is when it was more unknown. The outcome is more unknown. Okay, we pressed up, we failed straight back through the MAs. Okay, we finished back here, but what we're doing is smashing through the MAs, bouncing back. So you can see that there is some commitment from sellers. They're really pressuring the market down and they're going straight through the MAs. The problem is the buyers are just as committed and they're pushing it straight back up again. This is the first time when you get the market gone down to the MAs, it didn't get a wick like this. It didn't plow straight through and bounce back up. It stopped. So sellers, that is telling me that sellers are not as committed as they were just previously, because here they pressed it through, it rejected. They pressed it through here, and here, and it got rejected. So if you're dumb enough to try that again, you probably shouldn't be trading, to be honest. But so you know that the bulk of the market is looking at that going, look, we just stopped at the MAs, we've closed down here, and the very next candle straight back up again. Okay, so less sellers are stepping into market, and more buyers are starting to look at and defend the MAs now. So the price action is looking a lot clearer. So this to me, off the 5 minute, is a nice little entry. You can, like I said, those three candles, you've got a press down, you've got the market reacted back up, and it's starting to lift. So if we go down to the 1 minute chart to see what that price action is looking like, just in that circle, where are we? Here we go. You can see, not trading from that 5 as such. I mean, it was a good setup, what we were just talking about in the 5, but just looking for something, a setup on the 1, you could see flush down, the next candle, that was the 5 minute candle, we started to rally back up. And we've actually got a really prime, so on the 5, what we were saying, flushing through the MAs, we were doing that on the 1. So now, for me, this zone in here is probably the first time we really started to show some more strength from buyers and less from sellers. So it sort of works in with the 5 minute, what the 5 minute is saying as well. More strength from buyers and less from sellers. So that to me was a prime zone to buy it. And the market, like I said, it started to kick off and started to go higher. Now I don't think I traded this day. I was watching that. I didn't go long because I actually thought it was going to roll over. But the beauty is that I didn't trade short either. I was just sort of sitting there watching this going, oh, it's going to roll, da da da. I don't know why I was biased, probably short, but it's kicked off. And then so by then I sort of thought, well, I'm just going to call it a day. I'm not going to bother trading it today. I'm on the wrong side. My head's not right. I'll leave it. Okay, but what you can see is that setup there as we started to, this is when we pressed through the MAs. We started holding the MAs, and the 5-minute was starting to bounce up off the MAs as well. So to me, all you're looking at by the time you got this red candle here and the next couple of green candles, I'm figuring that, okay, if we break through the high, I've got an entry and I know exactly where my risk is going to be. It's going to be below this low, or you can even tighten it right up. So that there, the entry, say about here, by taking it below that one candle there, you've got a 25-point risk. Below the low is 37. So I'm technically generally using a 40-point risk maximum, so I can afford to buy that breakout. My stop below, I've boxed up my trade. I know what I want to see, and I know that the 5-minute is starting to go back into extension. It's had a bit of a pullback. It's holding the MA, so everything's starting to work in my favor by using those two different time frames. All right. So that's what I wanted to go through. I hope that makes sense. If there's something you want to look at, whack it into the chat, whatever it is, and then we'll get into it. The last thing I'll probably show you with regards to the time frames is Mount Gibson. It's not actually doing anything just yet, but if you can see the difference between that's the daily above and the weekly chart below. That daily chart, sort of this, we'll go here. Mount Gibson. So you've got this kind of price section here looks a bit choppy. It looks a bit messy, okay, which is fine. So if you're looking at just that chart, you could be looking at this thinking, we might roll over, we might go up. We've reacted off that 1 minute, that $1 zone, especially if you're looking at a bit closer detail. So you're looking at that. For instance, there may not have been much reason to buy that because really the MAs are swinging below, above, so the MAs have gone from biased up, biased down, biased up, biased down. And now we sort of just swung back up again. So really buying that breakout like we did through this high, the MAs hadn't been pushing up just yet, if that makes sense. So with the 20 was still below the 50. It's just crossed, on that Friday move, and then today it's just crossed up now. Okay, so looking at that daily chart, you could be forgiven to think, oh, look, it's not so crash hot. It may not be a buy. What really got me going is I do like the fact that you can see the MACD. It's actually heading higher. We've crossed back above the zero, so the momentum on the daily is higher. And if we go back to the weekly, that weekly is starting to cross up as well. And we're holding just by looking at that same data, we're actually holding the MAs as well. So we're pushed below the MAs here. We've pushed above. We've come back, retested it. We did hold a lower high. It went through the MAs, but the 20 was above the 50, and we come straight back up again and took out this lower high. With this move back into 1. Okay, we did fade back off 1. It's just not ready to go through 1 just yet. But what we've done, looking at this area here, we've bounced off the MAs. We've bounced off the 50. Okay, so what we're starting to do is hold those higher levels, slightly higher levels. With the price action is starting to show us something really good. Even that price action there, you might look at that, go, we've got a double top. I'm not buying against a double top. But if you go and get a lot more data, look at this action here. To me, looks really primed. We've got the market, which has expanded up here into new highs, took out this previous high from way back in 2014, had a good pullback. Okay, tried to go up from here. We got some selling pressure, took out the low. The problem is we didn't get through that low very far. Okay, and I'll draw this up so it becomes a bit clearer. Okay. Sorry, just had to delete that. But by piecing all the, like I said, this price action, if you just cleared the chart, you should be able to get some sort of idea of what's happening, some sort of idea from the price action alone, without your MACD, without volume, and without your MAs. You should still be able to get some sort of idea of what could be happening. So we've got markets pressed up, pull back. Okay, it was a deep correction of this move up. It was over 50%. Tried to go again. It didn't. It started to stall at a lower level. So if you're looking at that and you're long from up here, you're going to be, and you held it all the way through, you're a bit nervous. If you're long from in here with this deep pullback, you're probably going to be a bit nervous when it fails to get much through 1 again. And then we have a deeper pullback. Okay, so it takes out the low. That's a fine. So there's first few candles here, you're going, okay, you press up, pull back, lower highs into play, we're going to come all the way back down. The fact is it doesn't get through that low very far at all. Okay, this low here, it pushes up, it plows through it, but every time it tests through, it gets brought back up again. Press through, here, 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 and here, it goes straight back above that level again. Okay, the good thing is, at that stage through here, it's still kind of negative. We're sort of range bound. So we've gone from a move up, potentially fading off a lower high, potentially a move down, expansion down, to really go into range-based market. So when you go straight into that range-based market from a move down, you've got a question. And the fact that we got through the low and we couldn't continue on 3 times, and we really didn't get through that low very far, leads me to believe that, okay, I want to be biased up. Even from this initial price action, I want to be biased up and I want to be looking for long trades. And I'm just really about looking for my setups. And that's all based off sort of the longer term weekly. That's going to look a bit different I'm on the weekly now. And I want to be looking for, potentially in here. I want to be looking for a setup. We get through this high. I want to be looking, when we're rallying up here, I want to probably looking for a daily setup. See if we get a daily. Let's just see if we get through 80. Through 80 cents. So it was this breaking through here. So to me, that could have been your setup on the daily basis as we're coming. We didn't break the level, but you could probably say, look, I'll buy it on stop at 81. My risk is below this high low in here off the daily. If you're going off the weekly, the risk was, right down below 66 or so, was right down here still. So you can really minimize your risk if you want to take the chance that we're going to break through 80. Minimize your risk. So getting a 2-to-1 trade is a lot more ideal. So that might be 82 down to even say 81 to 71. It's a 10-cent risk. 20 cents from 81 takes you up to $1. So 2-to-1 trade, great. Without even breaking out. So you could have got a 2-to-1 if you just took it off at $1, or if you manage your risk, you might have got 1-to-1. But either way, you can see that by doing that, using your lower time frame chart, anticipating that break by looking at that weekly move, the fact that we've come back down and we tested right on the dot to the previous low in here. So we've touched it, gone through it 3 times, come back and retested at a higher level. So at a higher level means that next level we're going to attack is that 80 zone. All right, and there's a potential that we're going to break it. So you've got to add in all these, add in the fact that we've come back down to 61 and we started to lift off 65 here. Add all that together and you've got a good little story where, to me, the pressure's potentially going from rangy to potentially lifting. So taking that entry there is legitimate. On the 1-minute chart, I'm holding the MAs, I'm biased up, and then from my weekly price action, I think there's a chance that we can get through 80. Now, if it failed off 80, you're not risking a hell of a lot, okay? But the fact is it went through, great. So what we're seeing here, back to our weekly chart, what we've got is this expansionary phase. I'll just clean that all up. So we know now, to me, this zone through here is a confirmed support zone. So we've lifted here. So just looking at this weekly chart, we've lifted here. So we haven't, if I'm trading purely from the weekly, not my daily, I'm not refining my entries on my daily chart, there's no reason to enter just yet. We've got a pullback, we've got a secondary move down, exactly what we did here, and we didn't get too far before we retested. So this little 80-cent retest is the same as that 65-cent retest, for example. Okay, we held at a higher level. We held at a higher level here. So for me, after seeing those 2 moves down and that pop up to $1 and that pullback at a higher level off the weekly, I really like that trade. I really think that potentially, we get through $1 on the upside. If we trade up to $1 this time, I don't think we're going to pause this time. I actually think we're going to go straight through it. And if we get through $1, it opens up a move to $1.30, or even if you go an inside level, $1.20. So if you're long from 92, that's a decent little payout that way. Does that make sense? And that's all based around this 30-minute chart. Looks like we're holding a beautiful. If I take that one step back, and anyone that knows, it's been listening to me rant on for a while, knows I like these 2 moves. And that was basically taught to me from Davin. Look for the secondary move down, because I think the second mouse gets the cheese type of thing. You get caught in the trap. You bought on this little rally in here, and then it has a second move down, you get caught, especially on indices, when you're trading intraday. Kind of wait for that second move down. It just flushes out more people, and then it'll just bang, they can just take off. Okay, so if you look at that, you can see it did take off after that. Look at here too. We've also got this secondary move down, and before it started to find support, we've had a secondary move down here before we started to find support. So for me, I'm looking at this as a higher low. I'm looking for a breakout of the dollar, and I'm looking for that, at least that move up there. If we just draw it in a different color, this is an expansionary phase. We're looking to extend it out. Expansionary phase, it could take us up to that $20, $30, even take us straight through. We don't know. Okay. So that to me is going to be a higher low on the weekly basis. On a weekly basis, it's going to be a stronger trend up. We don't know how, we don't know if it's going to happen yet. I mean, I could be completely wrong. I might get stopped out of this trade, but I might have to keep watching it for another entry down the track for this, this expansionary phase to play out. But the fact that on the daily, I like this little setup on the daily, high low here, from the weekly, high low here, retest, and we're starting to go up. I'm sort of looking for that second move up. I'm looking for at least a move up to $1 here. Before, if we start to fade off $1, I might have to reassess it. But if we don't, and we go straight through, then I think it opens the door to a bigger move. Okay. So I hope that all makes sense, how you piece things together, not just getting caught up. So if you're just looking at this on the daily, and whether you're trading stocks, indices, or whatever it is, look at your different time frames. If I was trading this purely off the daily, I may not have taken that because, we popped up, we pushed above the MA. To me, that's more rangy than anything else. This most recent price action. It's probably clearer if I say this. This is more rangy. That's the price action there. More rangy, more choppy. Why would I take this when I think we're going to fade in? I'm going to get stopped out. Take a step back to the weekly. Okay, it looks a hell of a lot better, in my opinion. Okay, so that weekly is worth the risk off this daily chart. Okay, so let's look at IMU. Just get that up there. Let's have a nip of coffee there. So that was a daily chart there. That's your weekly. So if we look purely at the weekly, I don't want to buy it here. This is just all the things that would go through my head. I look at that weekly. I don't think we're on the rise as such. A lot of that upside movement's already been done. I'd say if we got involved around 20 cents, when you're not really, nothing's really kicked off. And by kicked off, I'm looking at sort of the momentum. So you got sort of momentum up, it plateaued a bit, and then we got a secondary push in momentum up when these, on the MACD it starts to come apart. I don't know. I don't even. The signal line is above the whatever line. I don't know what they're called, but you know what I'm talking about. The blue line is above the red line, and you can see they're getting further apart, meaning we're going into expansion. So that entry around here, if I'm dropping down to that daily here, that could have been this area there. It could have been a nice little setup. You sort of pop up through the highs. We rejected a couple of times, but if we can, you can sort of look at this. Say, if I just on the weekly, if I go sideways here, if I break to the upside, there's a good chance I'm going to only get that continued expansion from the one. Okay, and it's worth the risk. Buy the break, risk below, you've boxed up your trade, you know what your risk is, and just see if it plays out. And it did. It played out really nicely. It kicked on from 20 cents, you doubled your money up to 40 at least. Okay, so taking a step back and looking back at that weekly, to me, that's not something I'd want to be trading just now. Up here, I'm looking for the secondary move down. Okay, on the weekly, and then I might look to get involved. Now, I sort of feel that after we've got this big expansionary phase up, this is your first pullback. Okay, it's the first pullback we've had, and we started to head higher. So we want to be taking note on what's happening in these three green candles, but if we drop it down to the daily, what is the daily now telling us? All right, because what I've got to analyze, what you've got to analyze here, are we going to get a secondary move down? Because if we don't, this is a really strong move. Yeah, it could blast up through 50 cents and keep going. It might at least retest 50, so be it. But I'm just trying to look at that move up there. How much momentum, how many people has that dragged in from the sidelines to get involved in that market? All right. And when I'm looking at momentum's pushed quite high. So you're asking the market after a really good momentum move up to give me more, right? to give me a lot more because I don't want to lose on this trade. So if we go back down to the daily, we try to wind in just from this action here. That doesn't look to, I mean, yeah, you bought the break. You say you bought the break at 37. Your stop's going to be, I would just have my stop around 32 and a half. I'm not risking too much because that's your pullback on your weekly, and that's your couple of green candles. So it's usually your third green candle up on your weekly basis. But we haven't retested the low at all. I don't like the fact that we've had a pullback and we just started holding high lows again. I'm sort of looking at this to go, well, if we run out of steam here, we're going to fail and we're going to take out all these longs that built up in here. We're going to have a secondary move down on our weekly, go to a lower level, whether we retest 30, flush it, and then hold again, like we were just talking about in the last charts on MGX, whether we go through 30 and then bounce straight back up and above 30 and start to hold. So then we've got a double bottom to work off. A double bottom is better than a single bottom. A triple bottom is better than a double bottom. Remember, it just got more emphasis. It gives you more emphasis, especially with the trend. So if we get a double bottom here and the MAs are up, great. That could be really good. But at the moment we don't. It's just had a pullback, your first pullback in the weekly. We're starting to press higher in the weekly. I think this move up is a lot weaker than the initial move up. So if no one has got out on this move up, no one's been flushed out of the market just yet, then you're asking, it's, to me, we're running out of juice for it to continue higher, because it's not an infinite amount of buyers on the sideline willing to come in. It's a finite amount. Okay, so if there's only 100 people wanting to buy this stock, just theoretically, and on that first push up we've moved 80, there's only 20 people that can move it into the new highs, which is asking a lot in my opinion. Okay, so looking at that from a daily basis, you've got to set up here. Fine, you've got to set up through that high at 36. But I would be wanting to tighten my stop up fairly quickly. Any sign that we're going to pull back, I'd be wanting to have it fairly tight, because if it's going to go up, you're not going to have to worry about your stop anyway. But if it's going to come down and do what we were talking about in the weekly charts, then you want it as tight as possible. You can always re-enter, because if we go through and you get stopped out at 32 and we retest 30 and we reset up again, fine. But who's to say we're not going to get back down to 10? And if you don't get out, okay, you'd be sitting there rocking back and forward in your chair. You wouldn't be very careful. Does that make sense there? So yeah, it's going up. The weekly's up. Look at the weekly is up. Daily's up. Trend is up. It's just, to me, this move up here is not. It's not showing a hell of a lot of strength. We're not. We sort of popped up a couple of green candles before we had a couple of red. 3 red candles. 1 green candle before the very next candle was an indecisive candle. Okay, then a red candle. Okay, then we got bought up again. We've had a couple of good green candles, but see how we're getting sold into the close. Well, we're not finishing on the high. We're getting sold off the highs. To me, that's like someone edging out of the market. A bigger player might be selling into it, getting a bit of strength, taking some risk off the table, a bit more strength the next day, taking some more risk off the table. They might be long from 10 cents, you don't know. Or they might be long from 20 cents and they've sort of seen this big pullback, thinking the same as me. So, look, I'll just take some risk off the table, and lock away some gains. Okay, so I hope that makes sense there, Pete. Who put it up? Pete, yep. Last one, we're just getting to NVX. I have looked at this one. So to me, I'll just look at this. So you don't really need to look at your weekly, but we will. So we've got weekly move up, had a pullback, consolidated sideways at $1. Okay, another move up to $4. Good, powerful move up. Fine. We've had a pullback, so we don't know how far this is going to pull back, but it is earlier signs for me that if I just draw right in here, it's purely probably because of that 1 green candle, a lonesome green candle. Okay, so the way I assess this, if we just draw that in, I'll draw that in yellow. So that's all part of one move up. That's a good little pullback. We've retested it, and the reason why I say that's a pullback, not sort of here, it's not like 1, 2, 3, 4 like that. I sort of take this as one move, 1 red candle, green, and we started holding higher lows, higher low, higher low. Whereas here we sort of retested the lows. Okay, we retested all the way back here. All right, so I'm looking at that as all one move. So if I clear all that out, I'm looking at this as one move up, your first pullback, a secondary move up before we started to come in, and we got a lower high come to play, took out this low, and we're grinding or drifting lower. Okay, so that's a move up, that's a move up, that's a pullback, that's a pullback. So now what we're looking at is, okay, so clearly that's a level, and we've got this low in here, and it could be that we hold this level in here, say, was it 250, and we fade and we take out that low. We don't know just yet. Okay. But what I'm looking at is this green candle here is a higher low. So we're sort of looking at that zone there. So what we're trying to anticipate, I'll just draw this in a bit better. And I want you to look at this. We've got the pullback, move up. If this is all part of your secondary move down, and we started to grind, these weeks, I don't know what that was, these weeks in April, this kind of level, this area through here, we were grinding sideways and then sort of popped out through the lows, through two, and back up. So that's all part of one move. So to me, I can see that we've had two moves back and we haven't broken the trend up. So the weekly trend, the anchor is at $1. We haven't broken that anchor way down here. Okay, one move up, that's your pullback. Okay, it's a pullback in two stages, that's fine. The trend up is still intact. So if you're looking at it that way, the trend up is on the weekly. Sorry, the trend is up on the weekly. That's great. Okay, that tick, we've had a pullback of momentum here. We're pulling back a momentum there, and it's quite well established pullback. So now we're really just looking to try to see if buyers are going to start stepping in at above two. And that, to me, that one green candle there, I think is very important. So expansionary candle up, green candle up on the weekly. It looks like it could be holding a high low, and really what you're looking for is to see if, okay, what's happening on the daily? Are we getting a bit of a heads up that things are starting to move better on the daily? Yes and no. I'm still sort of looking for that same action. I mean, you could pretty much look at that if we just draw that up now. So bearing in mind that we're looking for a zone that we're going to find some buying pressure come in. The weekly's looking good. The weekly trend is up. This trend is still downside, down for me. And these are sort of the levels I'd be interested in. I'd love to see, if we can see through here, this was a zone, we broke it, we got to a lower level, didn't get too far before we started reacting up. We got little minor levels in here holding. So you can see that there's buying. As soon as we got through this, we filled this gap here and we got through this level, through at $2, we bounced straight back again. And now we're holding that level again. We're holding it up. So it's like Mount Gibson we talked about, that after the flush, we're holding a higher level. So this to me is a flush. Flushed it out, we start to hold a higher level. So I would probably be looking for an entry above this, breakout here. As long as we don't break back below 2, and this is my higher low, and I'm boxing it up here. All right, so I'll be looking at, potentially looking it up like that. Break the top side, my entry, my risk is below, around that $2 mark. And so if we do break up, I'm expecting it to trade, back up to these highs at the very minimum, 360. And then if it gets to 420, great. If it finds pressure at 360 and we bought it here, there's going to be a chance that we can take it at a profitable trade anyway. Okay, but if what we're looking at, remembering what the weekly was doing, if that weekly is going to, one leg up, two legs up, we've got another third leg, and it's a very, very strong stock for whatever reason, the fundamentals are awesome, everything, there's a good chance we go straight up through 4 and make new highs, all-time highs. So if you're on the right side and you've got yourself in the right zone by using the different time frames and putting that picture together, okay, when we want to enter and what we want to see before we enter long, then you're not going to get caught up in the chop. You stay out of the chop, give up a few cents. Don't care if I have to give up a few cents for the potential that this is the weekly trend and we're going to go blast straight up and through $4 like this, good, bang, up we go. If we start fading at 350 or so, this previous lower high, then maybe it's not going to work just yet. And we need a lot more time before this builds. Okay, it's very early stages in the company. I don't know anything about them, but if that's the case and we get this entry here, we've got our risk down below and we start to fade at 350 or so and I get stopped out at 325, I don't care. I still made 30, 40, 50 cents off that. Still a decent trade, it's 20% maybe. Okay. And just manage your risk, because what you're always looking for when you're in an expansionary phase, it should be higher lows on the daily chart. On the weekly chart, it's just a couple of candles up, okay? But on the daily chart, you're getting higher lows, so you can manage your risk on the way up. When you get stretched on the daily chart, there's a chance that we're going to go in a bit of a pullback on the weekly. And that goes for trading from your 1 minute chart, your 5 minute, intraday as well. When the 5 minutes just one candle after another, you're looking for your minor pullbacks on your 1 minute chart to go with that 5 minute trend up. But when we start to fade on the 5 minute chart, you don't really want to be going for high or low on your 1 minute chart. And it's the same on your stocks as well. All right, so we've probably gone a little bit over the hour, but anyway, I hope that all helps. We'll finish it up there, but I hope you can see that the value of really, sometimes it can be a bit more work, but if you can analyze what's happening with the price action, and we're trying to go, like I said, I'm only ever trying to trade with momentum. And don't forget, if you're trading intraday off a 5 minute chart and you're going with the 5 minute momentum up or down, you could potentially be in a 30 minute trading channel, but not a range bound market. So there's no reason why you can't trade offer to bid or bid to offer on your 30 minute chart or even your hourly chart, but be with the 5 minute trend down or the 5 minute trend up. Okay, so but you just have to bear that in mind. You're not going for this massive home run. You're not in free, when you're trading shares, for example, if we break into new highs and there is no resistance zone above us because it's into new all-time highs, you can kind of go, well, the trend is up for sure. I can let it ride a bit more, but when you're looking at it and you're trading with the daily trend here and it's broken up and we've got a pullback on the daily, we're buying into that pullback. It starts to go up, so we get daily trends holding higher lows, but we know that from our analysis on the weekly chart, we've got a bit of resistance here, potential. It doesn't mean there's resistance just yet, but we know that if it does react there, stops there, there's a good chance that sellers are going to come in there and we want to be out, okay? But when you're in the clear skies, it's a different story. So trading intraday on your, your lower time frame, if you're trading off your 1, your 5 and all that, you could still go with a trend on a 5 minute chart and you trade the same way, but you've got to bear in mind that you're not going for 200 points if the top end of the channel is 60 points away. Okay, you could still go from bid to offer, sorry, not in the channel, in a range. I'll draw it up. I don't want to screen snapshot that, do I? I want to go, let me just go to my, so what I'm saying is if you've got, say here, we've got an offer zone up here, we've got a bid zone in here. Okay, we've traded into that bid zone and we're looking for, we flushed it and we've come straight back. So I know here, okay, my 5 minutes pointing up, my bias is up, the 30 minute might still be down or it might be sideways. Your MAs might be sideways and you go, I don't want to trade long or short on the 30 because it's got no direction. But on the 5 minute, it's actually got direction because your MAs are starting to pressure up. But I've got to realize that on the 5 minute, I might have some resistance zone up here. I might come into some trouble up there. So if I'm forgetting what the 30 minutes doing and I'm not really preparing my trade, I'm trading basically, I'm just jumping in, I see the momentum's up, my 1 minute, I've got my entry, I've got my 5 minute heading higher. Okay, I'm going for the home run. And I'm going to have a nice wide stop. What is that distance there? 962 to, so say it's 200 points. So it's a pretty hefty distance between that. But say that was a 60-point range between these two levels. And you look at it and go, this is going to be my big one. I'm going for 100 to 200 points on this trade. A buy off there, I'm going to have nice wide risk. It could go straight up here, like I said, plow straight into that resistance zone, and then come straight back down in a screaming heap. And then you get stopped out in something that you could have had 50, 60 points up. Okay, does that make sense? So it's a matter of going back on your 30-minute chart and looking at, okay, my 30 minute I've categorized, it's going to be stuck in a range until I see this. So for now, it's in a range. What's my 5 minute? Okay, my 5 minute is going from bid to offer. I'm looking for a bid to offer trade, or I'm looking for an offer to bid trade when it trades back down from the range. Okay, that starts to hold. I get a lower high. No reason why I can't trade short off that, risk above, and I'm going back to the bid zone in here. Okay, whoops. Let's just look at that. And this trade here, I'll delete that. This trade here might have been a long off there, because you know exactly where your risk is going to be. But the premise is we're going to go bid to offer. Here, the premise is we're going to go offer zone up here to a bid zone. I mean, a sell zone to a buy zone, okay? But I know that from my 30-minute chart. That's what I'm looking for. And I'm trading with the trend on the 5, my entries off the 1, okay? So it really does, especially for intraday trading, knowing what kind of market you're trading in. There's times when I look at it and I go, my 1 minute looks like it's set up long, my 5 minutes down, I'm not trading it because to me, it's just rubbish at the moment. until I get something. So what I'm expecting is if the 5 minutes pointing down and my 1 minute is showing in a long entry, I'm expecting it to be a flush. I'm expecting it to be a trap. And I'll still want to look for my 1 minute entry down, but I want that 1 minute then to set up. So I'm not going to buy it from the one because it looks like it's set up. It's sitting on the MAs and the one, it's da-da-da, because I know that that could be a trap. It breaks out and it comes straight back down again because I've been caught a lot of times, buying into a breakout when it's not a true breakout because it turns around and collapses after that. Okay, so hopefully all that makes sense. Hopefully you get some value in it. If you did, great if you could leave us a like. And yeah, we're back in next week. So any questions, like I said, you can always send us an email to support@tradesetup.com.au and I'll get back to you. Alistair, I'll email you back now. I'll email you back in a minute. And then, yeah, feel free to give me a call, mate. I'll let you know a number. You can just give me a yell. And I'll answer your questions. So, yeah, thanks, Pete. Everyone else, thanks for joining me. And we'll speak to you again soon. Cheers, guys. Bye.